Good afternoon. Thank you, Jeroen. I'm grateful for the confidence expressed by you and your colleagues in the Board of Governors when you all endorsed the annual report. You should either have it by now, the annual report, or you will get it very soon. You may enjoy some of the quotes that you find there coming from all our governors, the 19 finance ministers of the euro area, where they express their support, but the way they put it is quite different, so maybe that's good reading for you. In the meeting, we reviewed the ESM's activities in 2014, naturally, and discussed plans for this year. I pointed out that the two rescue funds, the EFSF and ESM, combined have so far disbursed 232 billion, you already mentioned the number, in loans to 5 countries. In 2014 alone, we disbursed 10.6 billion euro to Portugal, Greece, and Cyprus. Concerning the funding of our loans, we have a total of outstanding bonds of 253 billion euro. In 2014 alone, EFSF and ESM issued bonds in the volume of 51 billion euro, and that made us again one of the largest issuer in euro. Thanks to our excellent rating and to our very good standing in the markets, we are issuing at very low interest rates, and we pass on these low rates to the beneficiary countries. In our report, we examine how these very beneficial lending conditions, loans with low interest rates and very long maturities, were critical for successes in the program countries, Ireland and Portugal. You will see some charts in the annual report that explain when, for instance, the maturity was extended in our loans, how the yield curve for these countries really fell quite significantly and quite differently compared to countries that are not benefiting from our loans. Our generous financing was really a game changer for the market perceptions in these countries. It eased their return to markets very clearly. We also examine again in our report to what extent there were savings in program countries' budgets thanks to our beneficial lending terms. For example, Greece saved 8 billion euro in 2014. The Greek budget saved 8 billion euro as a result of our advantageous loans. This corresponds to 4.4% of Greek GDP and is more or less in line with what happened already in 2013. In our meeting, we also had an in-depth look how much debt relief was provided to Greece as a result of a number of measures taken in the previous years, like improvements on lending conditions, the 10-year interest rate deferral, extension of maturities to 30 years, and the return of central bank profits from the purchases of Greek government bonds. Taken together, these improved conditions were equivalent to 50% of the euro area's claims on Greece. This is what economists call a 50% debt reduction in net present value terms. That means there were no direct costs for EFSF or for our shareholders. This must be kept apart. There's a big benefit for the country, but no direct cost for the lender. And it's fair to say that this constitutes a significant support from Europe's official sector to Greece. In the meeting of our Board of Governors, I explained the challenges we face investing the ESM's paid-in capital of 80 billion euro in the current low interest rate environment. With this challenge in mind, I was pleased to report to ministers our financial results of 2014. The ESM had a net positive result of 444 million euro, which is nearly 200 million more than last year, the year before. I was happy that the ESM governors followed my recommendation to allocate these profits to the ESM's reserve fund. This will provide a further cushion against potential losses and will support our high credit rating. Turning to this year, I can report that the ESM total net income was already 285 million euro during the first 5 months up to the end of May. Let me end by saying that I assured the ministers that with an available lending capacity of 450 billion euro, the ESM will live up to its mandate of safeguarding financial stability in the euro area as a whole and for its member states. The ESM intends to play its full role in the further integration of our currency union. Thank you very much.